Hi everyone and welcome to the channel. Today I'll be analyzing the market on what happened last week and we'll be anticipating the bias for next week. We will be going over S&P 500, US oil and Euro USD. Now personally this is a list of the concepts I'm mostly using. Of course these are not all of them, but these are the most of the ones that I'm using. So let's get started. I'll be starting with the weekly chart because first of all I want to identify the bias for next week and hopefully the week after. Now looking at the S&P 500, I think we're still looking bullish at the moment. Of course, it took out this high, and at the moment we need to wait for a reversal before we can confirm any shorts. So for now my bias will still be bullish. There's absolutely no reason as of yet to think that this will start going down. I mean, there's plenty of inefficiencies all the way down, but there's absolutely no reason to think that we will be shorting as of yet. On the daily chart, you can clearly see we have an uptrend for quite a long time now. Started from 28th of October and is going all the way until now. 136 days of bullish momentum. That's crazy. Okay, so let's go over the chart. We had this daily fair value gap here, which sent the price higher, tapping nearly into the 50% and then sent the price higher. We also have this candle still looks like as a grab on liquidity for now. So we need to be very careful on Monday on what the market is going to do. Same thing on the weekly. It looks like a grab on liquidity, so need to be careful not to reverse from here, but I'll still be looking for higher prices for now. Okay, let's go over the 4-hour chart. So here there are a couple of fair value gaps. One is here, one is here. Clearly price use this fair value gap to create the second candle, which basically tapped into 50% of this candle here, which is consequent encouragement. Most probably I'm still expecting the candle to go a bit lower, hopefully tapping into this fair value gap on Monday. Going to the 1-hour chart. So this is the NFP. Obviously there was a lot of volatility. I think a lot of traders lost a lot of money in this price action. There's plenty of fair value gaps. This uptrend has not just now literally tapped into the 50% on the Fibonacci of this swing, even less, tapping into the gold zone of it perfectly to the pip. Now let's go on to the 15 minutes. So let's look at what NFP done on Friday. So if we look at the sessions, we have Asia, London, and New York. Once Asia opened, it opened within this consolidation, and we had these highs and these lows. So we had this high, this low. During the London session, this high got taken out, causing the price to come down until the NFP time. Before NFP, price went a little bit higher and then took out all the liquidity underneath these two lows. We had a 5-minute gap around 8:15, right? 5-minute gap price tapped into the candles. If you have a look at the candles, tapped into to the 50% of this fair value gap, sending price higher. And this is the New York Open until 9:30. So let's mark out 9:30 on the chart. So this is 9:30. It took out the high once again. So how many grabs on liquidity we had? We had once, twice, 3 times, and 4 times. And now let's have a look at the silver bullet. Silver bullet was started at 10 o'clock. So between 9, we go down to the 5-minute. Between 9:30 and 10 o'clock, this is called the Judah swing. So price came up higher, taking out all the highs, and then right on the spot at 10 o'clock, price started consolidating. Now this would be a great trade idea because if you have a look at these lows, they're relatively equal. Now what ICT is saying is every single time we have clear, double bottoms and double tops, you can expect these to be points of liquidity where price need to take them out. Let's have a look on the 1-minute. Let's analyze the chart on the 1-minute. See what happens there. So after 10 o'clock, take out the pen. I have a high, a low, higher high, and then lower low. Price comes here, makes a double top, taking out all the shorts nearly. If you would have your stop loss here above this high, I wouldn't think you'd feel comfortable being in this short with price coming up here. Then makes another lower low, and then comes higher, making another higher low. Have a look at this. This is an 1-minute order block. So this would be your entry in a short. At the short here, stop loss above these highs, and take profit above the first low. Let's say here, this would have been a trade idea of 6 by just literally waiting into the silver bullet area, which would have been between 10 o'clock and 11 o'clock, and searching for a short. And look, honestly, you could have stayed into this trade and taken partials all the way down here. This low here, everybody that traded NFP, I believe, put their stop losses underneath this into the buy. If anyone got caught within this uptrend, they would have been murdered by the way down, all the way down. And he would have taken out most of your trade. This would have been come on, honestly, if you start looking at it, it would have been 28 times the stop loss. That's absolutely crazy. So NFP was a very volatile day. Great day to trade from my point of view. As long as you wait for the initial NFP volume to show you some candlestick structure and for you to enter the trade. Right, let's have a look on Thursday. So this was a Friday. I believe this was a great price action. From my point of view, honestly, you have a look at this candlestick structure here. You have the high, price went lower. Here it done a break of structure, and then the most obvious order block in here, from my point of view, would have been this one. So this is the last structure before sending price higher, and now price tapped into it here. This could be used on Monday to send price higher. Let's see what Asia and London gives us, and then at New York we can make ourselves an idea on what trade to do. Right, let's have a look at Thursday. This is Thursday. Thursday finished here. Let's put it before Asia. We'll make ourselves an idea. Right. So let's have a look at the liquidity pools So we are bullish, right, on Thursday. There was absolutely no reason because of this to think that we're going short. So we are bullish. We have liquidities underneath Asia here. And all of these lows have already been taken out by Asia. 1, 2, 3. Where is the market shift structure? So it's during London. This liquidity has been taken out. And here is the structure. We had a breakout structure of this high here. And here, if you have a look very closely, you can see this 5-minute fair value gap, where price taps it twice, fills it to the precision, sending price higher. So from my point of view, this would have been the entry. This is a very high stop loss, but I would have put maybe my stop loss underneath this gap. And then waiting for highs. So where would you come out of trade? Could take partials here, and obviously the entire liquidity for Wednesday would have been here. This is the daily liquidity. But and let's have a look on the left-hand side. I mean, why did price leave from here? What was the reason why? Why did price come all the way down here and not anywhere else? Because this is the order block. This is the order block. Price doesn't do anything for no reason. You have a low, price gives you an order block, sending price higher, and then for you to re-enter the trade in a buy, giving traders a second chance, you enter here with the take profit above the next daily liquidity. I mean, this is literally was this Monday? Monday's price action was literally model 22 ICT. Have a high, you have a low. Comes for the high, takes the low. Have a look on the 1 minute. So what do we have here on the 1 minute and 5 minute? So this was the high, which was violated. Here we're in the middle of nowhere, no market structure. Obviously price looking to come up short, lower, take out some of these lows. We have Asia, we have London, New York. What time is that? 9 a.m. Price took out London session liquidity, going higher. We have a 5-minute fair value gap, which you could entry, sending price higher. Coming up, creating lower high, sending price higher again. Lower high, sending price higher again. Order block here, 5-minute order block, sending price higher again. And then at lunchtime, US time, once the liquidity has been taken out, we have a high. The low has been violated here. We have a 5-minute fair value gap, sending price lower. We'll take profit of New York released session liquidity. Now let's have a look at Tuesday. Tuesday we have the following. So Asian started here. The price action hasn't stopped till literally midnight. Let's close it at Asia. So seeing what happened here, this clearly the high got taken out, the reversal happened around this area, price continued going shorter in Asia. So at London, we would be looking for the price to continue going lower. So what do you do in this type of situation is you search for liquidity grabs on the 5-minute. This is a liquidity grab here. You have a gap. We want the short price to come up lower. This is the low. This is the next point of where the price, we're expecting the price to violate. Then, before the end of the session, you have a high, just go violate it. Another high, these go violated. Here, we have a low, which go violated, telling you the price is expected to go lower. We have a 5-minute gap, but tapped into twice, sending price lower. Again, leaves another 5-minute gap open on purpose, and on the 9:30 opening, price comes into it at 10 o'clock after the Judas week has finished. Comes into it, taps it, send price lower. And where did the price action stop here? Where did the short stop? In this order block. Every single time you see a consolidation like this, you'll be expecting price to come back into it. And it's exactly how it does it here. This is where price opened. This low has still not been violated. So you can see how strong these order blocks are, especially in this situation. From my point of view, Tuesday was an interesting day. Most probably the toughest day for me would be as a trader to trade on Tuesday. I hate it when price just continues going lower, and I was expecting it looking at Monday after this structure that price will have to continue going lower because it just literally had so many lows. With these lows, especially these two, if you look at it, they were double, so they were like literally equal. And it took out literally everything until this order block. All the lows have been violated, then sending price higher. Literally done, finished its business. So from my point of view, S&P done a great job the entire week. Really was looking for trades and looking for logic. I'm sure you would have found it as long as you'd be applying the ICT concepts. Let's go over oil. So let's start one on Monday. Where did Monday start? Monday started here. And what do we have? Let's go over the weekly and daily chart. So on the 1 week chart, price reversed from this fair value gap here. Tapped it a couple of times, sending price higher. On Friday, price came into this little fair value gap here. I know it's not much, but look what it does to price. I mean, look at the reaction from it. Literally tapped into it, sending price lower. So from my point of view, we're still looking bullish. This fair value gap already done its job, making this candle red. So we've had a reaction from it. And now, from my point of view, until I see any proper break of structure, there's no point of me thinking that this price would reverse from here. Let's go on the 1 day. So what do we have on the 1 day? So this is for the fair value gap. Let's send the price higher here. Tapped it 3 times. Made a swing here. Price tapped in the consequent encouragement of this wick. Sending price higher. I have a 1 day fair value gap here. Sending price higher again. And here we are in a little consolidation. Let's go on the 4 hour. You can clearly see why highlighting on the higher time frame can help you make trading decisions during the day. I have an order block here. Price taps into it, gets it higher, takes out two lows. So these two lows have been taken out here. No reason for this low to be tapped again. Then, in this price higher, we have a 4-hour gap. Price taps into it, creates an order block. Because this is the last order block that sent price higher, it's already been tapped once, twice, and we're expecting it now most probably again to be tapped again. It's already in the area, so look at it, respecting the 50% we have on the 1 hour. So the liquidity, it's obviously underneath this low. So I'm expecting on Monday for this low to be taken out. Once this low has been taken out, this would be a bullish momentum for me, considering that all these gaps are still all left open. Price just went short from this area here. This was great for a bullish trade. Let's go on the 15-minute. 15-minute again. By zooming in into this order block, this is the 4-hour order block I've been talking about. I have this order block here. Price never tapped it as it went higher. Just now, this would be a trade entry. So when price action is going to look to take out these lows, I believe price will just move from here rapidly. Right. Let's look at the sessions. Let's see what happened on Friday. So what do we have? London. I think you'll be better off to start with Monday. So start with Monday. So what do we have on Monday? On Friday, price came up, took out this high. This was Wednesday high from last week. Took out the high, sending price higher. And then at 11:45, price went lower. Created a consolidation in here. All the liquidity will be above this high, and above this high we also have a 5-minute fair value gap where we enter short from. So from the 5-minute fair value gap you enter short, ending up taking out all these lows. What I like about oil, that at London you can find a lot of trades comparing to S&P 500, which mostly you would find trades in New York. So I prefer trading oil during London, especially that I am in London. So we have all these highs. Price, I believe here is stopped in the 50% of this consequent encouragement. And then we have a short from this 5-minute fair value gap on Monday. Here we have a break of structure. And this is the candle. This is the candle that caused the break of structure. Price coming into it on, this would be your Tuesday short. So you have Asia, London. This is the candle that caused the break of structure short. So you would want to enter short here. Obviously, as you can see, it did not take out the low. So hopefully it would have taken some partials all the way down. And then most probably would have hit your stop loss if you would have stayed in a trade, hoping to take out this low. It didn't, because it came up into this 5-minute fair value gap, but it did not tap the order block. So in this 5-minute fair value gap, took out this low, sending price higher. Let's have a look on Wednesday. So Asia, London, and then the area of interest would be above this high. This high, and took out all these highs as well. So you see price on purpose on Monday did not take out this high because you waited for Wednesday. Price left this candle here, 50% of it, tapped it, sending price lower. So now everything here, it's sorted. There's no way, there's no reason for the price to come up back here again. Not at least until it's taken out this low. Price came lower. This is the order block left behind. There's this gap got violated, did not hold price any higher, creating an order block, which price would use later on Friday to come down. So when you see an order block like this, I mean, to be honest, I would have not entered short here, but I would have used this order block as a short for Friday. Price came all the way back down, but where did it come to again? This is the order block that got used. Send price higher. Price never tapped into it. Price used it here. Our 5-minute fair value gap. Price used. Send price lower. Now on Friday, it literally stopped underneath these lows. Now this was an NFP week. Oil is not affected by NFP for some reason. And hopefully we're expecting this order block to be tapped on Monday to look for bullish momentum. If we see a break of structure upwards, don't just enter without seeing a break of structure. You always have to confirm the trade. Have a look at Euro. So Euro, I really like Euro USD price. It's a very good price action. So this was the low, and this was the order block. Price, use this order block to send price higher here, and price came back lower. As you can see, this is not a market shift structure because this just took out the liquidity. So we're still expecting for price to go higher. This is how the order block looks on daily. Beautifully tapped in twice, sending price higher. This was the break of structure on the daily chart. Price came in, tapped this zone, sending price higher. On the 4-hour chart, so if you wanted an entry into this uptrend, you would have wanted to see it. So as you see, the break of structure happened here. This is the gap. Price taps into it once, sending price higher. Look on the 1-hour. I'm curious about this area. As you can see, this price tapped it twice, either 3 times. Why? Why here? Because of this order block. So the order block that price used. So every single entry, I want to enter long. I want to stop loss underneath the order block. Once, twice, 3 times, 4 times. You're expecting bullish price action. So you see these order blocks are really powerful, but it's very hard to identify them. It's not always that easy. So here, I have a break of structure. Price coming back in one of these order blocks. Sending price higher. Then again, I have a break of structure here. We have this order block. Sending price higher. Here, the 5-minute, the bullish. This is the break of structure. This is the gap. I'm expecting price to come back into it because this is the NFP liquidity. Don't forget, everybody went on buy here. Underneath this low, we have a little broker underneath. So still expecting for price to go short. Euro was really ugly on NFP. I mean, literally took out the liquidities on both sides. This is a liquidity point. This is a liquidity point. Took out the low, went for the high. So everybody that literally tried to go both buy or short, they just lost the trade. Always never trade these news. I mean, they're honestly just to lose. You're just gonna lose money on them if you don't know what you're doing. And you can always make money in clearer price action movement and not such volatility. So for now, in terms of euro, I'm still bullish. I'm waiting for some of these lows to be taken out, and then hopefully this order block would hold up going higher. We'll have to wait out. And if you see a clear break of structure from the order block, then you know for sure that's your way to entry. Because you really want to enter in a gap. You wait for your order block to be tapped, wait for a gap to form, join the gap, go for the next liquidity point. So this would be your next liquidity point on Monday. If price does violate this low, and this order block would hold. But I'm still on my buy is still bullish on euro, still bullish on oil, and still bullish on S&P 500. So that concludes the analysis for today. Hopefully you enjoyed the episode, and I'll wait to see you again.